Hi there and welcome to Ducoscopy's Targets in Focus on the very last day of this trading week. Today I'm joined by Thio Chin Loo, Senior FX Strategist at BNP Paribas in Singapore. Well, hello there. So let's begin with the renminbi. Now this week we saw it rising near a 19-year high after the People's Bank of China boosted the currency's reference rate. Now can you tell me your views on the strengthening of this currency?
I think the trend will continue. The reason that the expectations of Chinese yuan appreciation have come back into the marketplace is because I think one, growth has seemed to improve from last year. So therefore, driven on the back of growth, will be the drivers of growth will be an improved trade surplus, and as well some inflows into the Chinese economy. So on the back of that, it should result in a stronger Chinese yuan bias. We have an end Q2 target, which is say 6.15, and Q3 6.08, and Q4 6.05.
And moving on to the Malaysian ringgit. So how is this currency performing ahead of Malaysia's elections?
I think there is some risk. There is a clear risk that the government could lose its hold on power, given the trends and the sentiment we're seeing on the ground so far. So, but having said that, even with a potential policy shift, investors haven't dumped the ringgit, and in fact, it has strengthened quite a fair bit since early April when the election announcement was made. So the drivers for ringgit appreciation are, I think, still fairly firm inflows into Malaysian bond markets. Malaysian stocks have done quite well. It's not up a lot. It's up about 1%, but it hasn't been sold off. And the other thing I think is the trade surplus in Malaysia. Malaysia runs a chunky trade surplus, and with capital flows quite steady, the trade surplus tends to exact a positive pull on the currency. Our target for dollar ringgit over Q2 is at 3.10. For Q3 2013, it's 3.05. Q4 is 3. And Q1 2014, it's 3.05.
And finally, looking at the Thai currency. Now this recently hit a 16-year high as capital inflows flow into bonds. Can you tell me more about the impact these flows into bonds are having on this currency?
Yeah, the main drivers for the currency is bond inflows. There's been a whole lot of inflows in Thai bonds, and driving the inflow into Thai bonds, I think, is just that Thailand's macros run quite nicely. Growth is stronger than a lot of major economies, but not that strong that would engender inflation and lead to Bank of Thailand hiking interest rates. So, steady policy is fairly good for the bond environment. In terms of the other drivers, there's some evidence of hot money inflows, particularly besides Thai bonds, is to Thai property markets, and Thai stocks as well have been one of the outperformers in Asia this year. So the Thai baht has strengthened and been one of the top performers. The only thing that could hold it back is fears that Bank of Thailand, the central bank, could do something to dampen Thai baht gains, because businesses are starting to lobby against too strong a Thai baht that would hurt exports. So that's probably the only thing that could hold back Thai baht gains, if the Bank of Thailand decides to do something to stem Thai baht strength, and these could be the form of either some withholding tax on bonds, or to mandate a holding period for bond holders, or to continue to intervene in the spot market. We have it as 28.50 for Q1. Q was 28.50. Q3 is 28.20. Q4 is 28 figure, and Q1 2014 is 28.20.
Thank you very much, Chin Loo. As always, it was a real pleasure speaking to you today. Well, viewers, do have a look at all our interviews on the Ducoscopy website, and see you again on Monday.